Ladies and gentlemen, fellow investors, finance aficionados, and those who accidentally stumbled in here searching for the least painful way to understand the stock market, you're in for a treat today. We're going to weave through the wizardry of one Warren Buffett, as explicated in The Warren Buffett Portfolio, Mastering the Power of the Focus Investment Strategy. This book isn't just a manual, it's the ripe fruit of financial wisdom, picked from the tree of investment mastery. So, fasten your seatbelts and stow your skepticism overhead, because we're about to embark on a journey through the top 10 insights from this beacon of financial acumen. Set your minds to impress me mode, because that's precisely what these insights aim to do. 1. The Zen of Focus Investing. If you think your investment portfolio should look like a kid's overly enthusiastic 100-flavor ice cream sundae, chaotic and splattered everywhere, think again. In his book, our monetary maestro preaches the gospel of focus, holding a concentrated portfolio of high-quality, high-potential companies. It's less about having all the eggs in one basket and more about having golden eggs in a lesser number of baskets that you watch like a hawk. 2. Circle of competence. This isn't just another geometrically inspired self-help phrase. It's the boundary within which you kick investments' butts. In Warren's words, know what you know and know it well. If you're savvy in tech, then don't wander into pharmaceuticals unless you have a map, a guide, and a good reason. Dabbling in the unknown can be as successful as teaching cats to synchronize swim. A spectacle, but hardly effective. 3. Temperament trumps IQ. This ain't the stock market of wizards. You don't need an IQ that scorches the charts, although it wouldn't hurt. Buffett suggests that emotional discipline is the key. The market is as moody as a teenager. If you're too reactive, you'll end up with investment decisions as stable as a pogo stick on a trampoline. Stay calm, carry on, and remember that patience is not merely a virtue, it's a dividend earner. 4. Mr. Market is your distracted dance partner. Imagine the stock market as a dance partner who had one too many espressos. Sometimes they're on point, sometimes they're 3 beats behind, and occasionally they've forgotten what song is playing. That's Mr. Market for you, and your job as an investor is to dance smoothly, irrespective of his erratic moves. Buy when he's pessimistic, sell when he's overly giddy. It's like buying umbrellas on a sunny day and selling them in a downpour. Peculiar, but profitable. 5. Risk rethought. In this script, risk does not take its usual seat as the villain. Buffett defines risk not as volatility, but as the chance of permanent loss of capital. It's not about how much an investment bounces up and down, but about how solid the trampoline is. If it's made of sturdy stuff, a little bouncing, even some temporary sinking, shouldn't faze you. 6. The myth of diversification. Diversification is hailed as the holy grail of investment strategies, the financial equivalent of don't put all your eggs in one basket. But the Oracle of Omaha serves a hot take. Over-diversification is dilution. Spreading yourself too thin is like adding water to fine whiskey. You just ruin a good thing. Instead, invest heavily in a few thoroughbreds that you've researched like a scholarly stalker. 7. Margin of safety, the investment buffer. Imagine jumping over a chasm. You don't aim for the closest edge. You take a good run up to land comfortably on the other side. This is your margin of safety in investing, the difference between the intrinsic value of a stock and the price you pay. It's a cushion as important as that of your couch during a Netflix binge. It's what keeps your capital snug and safe when Mr. Market has a temper tantrum. 8. Business, not stocks. Here's a striking turn. Treat each stock purchase as if you were buying the entire company. This is a subtle mental shift from paper trading to business buying. When you start looking at stocks as businesses, your focus sharpens. You become interested in profits, management, and competitive advantage, not just wiggly lines on a stock chart. It's akin to dating for marriage rather than a quick coffee, a serious commitment. 9. Management matters. It's not just about the business model. Who's driving the car is crucial. A great business with poor management is like a Ferrari with a hamster on the wheel. It's not going to win many races. Look for companies led by visionary, competent, and honest management. They are the captains who will not abandon the ship when the waters get choppy. 10. The intrinsic value. This is your North Star. Determining the intrinsic value of a business involves evaluating tangible assets, profit potential, competitive advantages, and a sprinkle of crystal ball gazing into future performance. It's what tells you whether a stock is a Christmas discount or a Black Friday scam. Paying less than the intrinsic value gives you that margin of safety Buffett so dearly cherishes. And there you have it, folks. 10 golden nuggets of wisdom from the gold mine that is the Warren Buffett portfolio. Buffett's insights are less about sleight of hand and more about common sense, sprinkled with diligence, discipline, and a dash of daring. They aren't just strategies, they're battle tested commandments chiseled in the stone tablets of the financial Mount Sinai. Remember, in the Church of Buffett, we don't just invest, we invest with focus, clarity, and an understanding of the business at the deepest levels. It's not about the thrill of the trade, but the thrill of building something that lasts. An elegantly constructed, well-considered portfolio that's designed to stand the test of time and market tantrums. Whether you're seasoned in the market's ways or a novice donning your investment training wheels, these principles are your guide to navigate through the fog of financial frivolity. Warren Buffett doesn't just offer us a roadmap. He gives us a GPS that talks, recalculates when we're lost, and gently guides us back to the path of growing our wealth responsibly. So, thank you, Warren Buffett, for being the financial Yoda to our eager Lukes and Leias. And thank you, the Warren Buffett Portfolio, for being a lighthouse in the occasionally stormy seas of the stock market. May your pages stay forever crisp and your wisdom never out of stock. Finally, remember, the riches of knowledge in this book don't amount to much if they aren't applied. It's up to you to take these insights and convert them into action. The market waits for no one. An opportunity, much like a bus during rush hour, stops for only so long. So crack open your portfolios, shine the light of focus investment on them, and may the bull be with you, always.